How to answer an exam standard question in 10 easy steps. Step 7. Now what we want to do is very simple working, the money rate of return. What we want to establish here is the rate of return that includes inflation, because if you remember, we were given the real rate of return, which is the one without inflation. If you remember, from your tables, we are given this formula. 1 plus I equals 1 plus R multiplied by 1 plus H. That comes from your formula sheet. I'm not going to get excited about that. But of course, you have to remember what I, what R, and what H mean. I means the money or nominal rate. R means the real rate, and H means general inflation rate, or inflation maybe. So, we've got our formula, and all we have to do is to take the information from the question. If you remember, looking back at the other information, we were told we have a real cost of capital of 5.7%, and at the bottom we are told general inflation is expected to be 5%. So, all we do is to slot that information into the formula. And what we see here is that we end up with a value of 11%. Not difficult, I hope. Very simple, but it's worth a mark. Again, you've got to know this stuff. So, no computations like this. They guarantee you marks in the exam. Or maybe cutting it the other way, if you don't know them, you guarantee to throw those marks away.